Hi everybody, Alex Deployer from Expert Forex, and in today's video we're going to be looking at our current trading competition results. We are trading the grid trend multiplier, and it's a competition that stretches over a 2-month period. Just over 3 weeks have transpired since the start of the competition, and there have been some magnificent results. 900% plus, 600% plus, 350% plus recorded in this competition. Now there are lots of lessons to be learned from these results. We can actually go and have a look at the strategies that these people have followed, and also the mistakes that certain traders have made. So if you want to learn how to make 900% return on your investment in 3 weeks, watch this video. Okay, we're on the competition website, on the FX Blue website, and I'll give you the link to in the description and also in the commentary of the video. But let's have a look through this website. As you can see, there's $2,000 prize money, and the rules basically, just going to go through them very quickly. The main ones is that it started on the 21st of March and will end on the 22nd of May. So it's a 2-month period, and we've just gone over 3 weeks into this competition. So it's still early days. Traders all start with $10,000 in their account, and a lot of competitors have been disqualified because they started trading before the registration into this competition was complete. Now you can join this competition quite easy by linking your account to FX Blue and then joining through the join tab. Okay, so let's have a look at the leaders of this competition, and to do that you go to competitors, and there they are. There's the leader. It's a person called and each participant gives themselves a name that keeps them anonymous. We don't know who these people are, and we will only know once the competition is over. So at the moment, 200% return is leading now. 200% return, let me put it in context, is over a 3-week period is actually quite phenomenal. Many people would love to have those kind of returns. But if we look down the list, there have been some really good returns. All of these returns are exceptionally acceptable. Here's page 2, right down to 32. 32% is still very acceptable returns, and so on. And then the returns go on to page 3. Now going back to these these results, in the title and in the thumbnail of this video, I mentioned 900% and 600%, and I'm going to show you where that comes from, because that was what was achieved in this competition. And I'll show you how I find that out. So what I'm going to do is just tidy this up a little bit. We don't need so much space. And what I'm looking for is this peak equity number, because it tells you the best somebody has done in this competition. So for instance, Swan FX, the best that they've done is 31,300. They're at 30,800, so they've lost $500 in the process, and that's how you can read that peak equity. It's the best peak that somebody's reached. Now, in order to find the highest peak equity, you just basically sort this, and I'm going to have to sort it twice because I think it sorts on negative and then it sorts on positive. And there you can see that this participant had a peak equity of $100,000, which means he made 900% return in the space of maybe 2 weeks. If you go into his account, you'll see it's over a 2-week period, and you can see he started with 10,000, and he blew it all. He went 100% up and 100% down and blew it all. So his growth currently is minus 87. Now the latest equity seems quite high there, but what happened here is he got a margin call. He overextended his lot sizing, which is one of the lessons that we're going to talk about in this video. Then if we go down, we'll see some more ones. There's 70,000, which means he made a 600% return. Currently is plus 28. So he's gone from 70,000 to 12,000. Then this next one, 45,000. That means he started with 10, so he made 35,000 profit. But he's right down to only 2,000 right now. So it shows you that there were a lot of people that shot out of the box, sprinters in a marathon that did fantastically well, but due to either lack of experience, a lack of knowledge, taking chances, a whole lot of psychological factors, and I'm talking about psychological factors, they blew it. And that is typical of Forex trading as a whole. So many traders blow their accounts for the wrong reasons. And then if we go further down, here's our current leader, 200% return, and you can see the equity is pretty close. If you take 10,000 off there, it's pretty close to what it is right now. So that leader is actually doing pretty well and trading quite steadily. So why these differences? Why do we have the current leader leading at 200% and we had fantastic returns previously? Now, if you know the story of the hare and the tortoise, then you know what has happened here. And this is a typical situation where there are two ways of making lots of money in the Forex market, and I'll go through them. You can take high risk with high lot sizing, and you could be lucky enough to catch a particular trend, and you could get well ahead with your trading. And due to psychological factors such as greed, fear, a lack of knowledge, bad luck, all kinds of other things, you could end up blowing your account in spite of achieving great returns. Now, there isn't a trader that I know that has really increased their account tremendously only to lose most of it and give it back to the market. And this is what we're talking about right now. But it's actually worse in a competition, because when you are so far ahead, these guys were hundreds of percent ahead of their competition. You don't keep on trading. You just close all your deals, stop trading, and let them catch you. And I can tell you, very few people will be able to catch 900% or even 600% in this competition. It's going to be interesting at the end of the competition to see what percentage wins this competition. But certainly, the objective of joining a competition is to win it. And certainly these guys have lost the picture. And the same thing with normal trading. The objective of normal trading is to create a career that will see you through the next 10 years in your trading. So trading is a marathon, not a sprint. But in a competition, it's fair to sprint if you can stop trading at the right moment. And also know how to generate these great returns. So let's have a look at how these guys do it. Now on your screen you can see two strategies. I call them the hare strategy, and the one is the tortoise strategy. And tortoise strategy is the one that will make you survive in the Forex market for the next 10 years. It's the slow and steady approach to making money. And that is the psychological thing that a lot of traders can't do, is they can't settle into a slow and steady approach of trading. They want to be the hare and be really, really dramatic and make lots of money in a short time. Now the hare can do that. If you can spot a good trend and you can top up your trades on a continuous basis, you can get to those 900 and 1,000% returns. And here is how the hare does it. He just risks a lot of money on a continuous basis. And as he's successful, he risks the same percentage, the same percentage, the same percentage, and his $10,000 goes up, and he risks more and risks more, just risk more, and so on, until he reaches these dizzy returns that are possible. And as you can see here, in about 10 or 12 trades, you can actually push your balance up tremendously. So that's one approach. It requires skill or luck, because you've got to catch a trend that's going in the right direction, and you've got to double up on your trades as you are succeeding. So that's one strategy, a good strategy for competition. This is what these guys did. But the problem is they didn't stop. They didn't cash in. And therefore, what happens is when you're then at that level and you're trading that number of lots, you only need a little bit of a retracement and you blow your account. So like here, there's three transactions backwards and you've blown your account. Very, very dangerous approach, but good for trading competitions. And if you're that kind of trader, you could trade this, but you need skill, luck, and you need a lot of discipline psychologically to cash in at the right time. Then we have the tortoise that only risks 2.5% of their account in one trade, and they therefore start where this one is trading, let's say at 20 lots, they start at 2 lots, and then they slowly increase their gains, and then after they've reached a certain point, they start increase their gains to 3 lots or 2.5 lots, and so on and so on. And then when they have a bad streak, it doesn't kill them, because their balance just goes down from, let's say, 13,000 to 11,800 to 1,200. So they don't blow their account in a bad streak. And this is the approach that's recommended for if you want to be in the market for a very, very long time. And that is why we recommend 0.01 lots per $1,000 when you trade our EAs. Rather stay in the game and make less than blow your account because you've overexposed yourself in terms of lot sizing. Okay, so now here's a typical thing that happened during the competition is you start out here, you trade 1 lot at this level, it goes up, you trade 2 lots, 3 lots, 4 lots, so on, so on, so on. And then you reach that particular point, and then suddenly the market says, hang on, I want to go in reverse. And within a day or two, you would blow your account at that level if you're trading 11 lots per transaction. So here's a typical example of what happened, in fact, is that traders got to a very dizzy height and then blew it with the slightest retracement. Instead of stopping trading there, or even stopping here, they still would have won the competition. They let that spoil their account. In fact, in this particular example, in the competition, the trader traded 225 trades. So it wasn't like a few trades. There were a lot of trades made, 225 trades, but the increase in the lots was too aggressive. And also, in fact, when you're in the lead, you either stop or you decrease your lots tremendously to maintain your leading position. You always have to ask yourself, what is the objective of my trading? Is the objective of me to develop a 10-year career, or is the objective for me to develop a 2-week career? So you always got to keep that objective in mind. Now, this isn't what happened, but here's an example of how the grid trend multiplier works. It cashes in by touching the same price level over and over again, and this is in fact how you make income from it. And that's why it's called the multiplier. It multiplies the gains by cashing in every time it touches one of these grid levels. And this is a slower approach. This is the tortoise approach, and the current leaders are trading more or less on this kind of approach, with much lower lot sizing. Okay, so now you can identify the reasons for failure. There's fear of and missing out on another trend upwards. Let's say you're up there, you're trading 10 lots. Oh, I'm going to miss out if I don't continue trading. Forget about it. You are so far ahead in the competition. What you're scared of. Other thing is greed, which is very similar to fear, and that's exactly it. Oh, I'm 900% up. Oh, I must go that extra 100% or my extra 200%. So there's that greed element, and this is not only in the competition. This is in real life trading. There's also the lack of knowledge, because these traders often do not realize the margin requirements for those massive lot sizing. And a lot of them, like one of them, in fact, what happened is they got a margin call and they were positive because they had overextended their lot sizing. If you don't have enough margin in your account, the broker will do a margin call. So there's two things you have to have if you have enough money to finance your trading, but also the margin that's required. The margin you have to put aside for the broker to open your account, your trades. Then taking chances. Taking chances is what this competition is all about, because it's on demo accounts. You can take as many chances as you like, and that's what I'm trying to encourage. I'm trying to encourage people to take part in the competition, succeed, fail, analyze why they failed, that kind of thing. It's a learning experience. If you are on the sidelines and you are watching this competition, I tell you, you will not gain anything from it. You'll just at the end say, oh, that's interesting. Oh, this is what the guy did. It will not internalize and make you a better trader. The only thing that does that is trading. So get involved, open 10 accounts, trade them in this competition, see where you go. Try the two strategies. Try the one, a few accounts trading the rabbit strategy, and trade a few using the tortoise strategy. Okay, so go down to this competition, go and join it, trade the grid trend multiplier, and see how you go. Use the two strategies. Take a big chance with some of your accounts, and take medium risk with others, and apply that and see how you go. You will never win if you don't participate. You will never gain experience and make mistakes and learn from those mistakes if you don't trade. So this whole competition was to shake a few people out and come and trade in this risk-free trading competition. There's no entry fee. You can trade it on a demo account. It's absolutely risk-free, but you will internalize the experience. It will become part of you, and you will know, oh, I overextended my lot sizing, or I underextended my lot sizing in this event, or I misread the market in this particular case, or that. That's the only way you learn. Now, I hope you've learned something from this video. The hare and tortoise approach happens in live trading as well as in these demo trading competitions, and you have to identify that. You have to say, am I trading like a hare at the moment, or am I trading like a tortoise at the moment? Or you have to get your priorities right. Am I in this business for 10 years, or am I in this business to make money in the next 2 weeks? So from me, Alex Deploy, cheerio.